All right, ladies and gentlemen, I want to welcome you guys to the MBA live trading workshop. Are you guys excited? Yeah. And so we're getting started. We're a little tad bit late, but we got everything set up. And so everybody that's on Zoom, if you guys can unmute yourselves for 2 seconds, let me know, are you excited about today's workshop?
Yes.
Yes.
Oh, yes.
Yeah.
All right. So we got Trinidad in the building. We've got Australia. We've got quite a few places. I think we got the UK on, Ireland maybe even too. I can't see everybody, but I'm glad you guys are here. Make sure that you mute yourselves, okay? Those of you that are on Zoom, you can see me if you have your window open, but you also can see my screen because we're really going to be working from the screens, okay? And so you can hear me, and I'll be saying a lot of things. And of course, those of you guys that are in the room, you can take your notes, and we'll be ready to go, right? So I'm going to lead us on TradingView for the time being, all right? And I just want to make sure everybody has TradingView up, right? Oh, I can see the Zoom over this way. All right, everybody has TradingView up? Yes? Yes. Okay. So what we're going to do is we're going to be able to cut through some time here because we've got a little bit less than what I had planned. So I'm going to expedite some of this stuff, but you guys are fast learners, right? Okay. We're not going to eliminate anything. We're just going to expedite it. Everybody understand the difference? Okay. So what I want to do first is I want you guys to understand what we're going to cover today, all right? We're going to cover 3 basic things as it relates to the market and trading naked. Right? Now, that means you are going to be naked when you trade, unless you want to be. You're at home, you can do it how you want to do it. Just don't have your Zoom camera turned. All right? So trading naked basically means that we are looking at price action by itself. Everybody say price action. Right. So we're not going to be using indicators and things like that. Now, I'm not against them. It's just in my personal experience, what has happened is that I've gotten way more confused with indicators than without them. That's just me. Anybody else feel that way? Right? I see them and they make sense to me what it should be doing. But when it's time for me to go place the trade, it's like something happens. It falls apart. I don't know. So the ease of that turned out to not be so easy. And so I resulted to really trying to figure out how to trade naked, right? I want to read the price action. I don't care what the indicator is doing. I want to be able to see the patterns of the market. And so I tuned into a couple of master traders on IML TV. Some of you guys might know at least Mr. Oren Wright. You guys know Oren Wright? Yes. Okay, so Oren is my buddy now, right? He recently moved down from New Jersey to Atlanta, and we run Oren crazy and ragged as much of the time as we can. But he has an amazing heart. So the first thing I want to make sure everybody understands is that what I'm teaching here today is a more in-depth analysis of the way Oren teaches, which means that you can find support in what I'm saying on IML TV. Does that make sense? Yes. So even though you'll get the recording of this and you'll get it, if you now start studying Oren, then you'll see this better and you'll see it more and it'll be consistent with you, okay? So that's the first thing I want to do, is make sure that you know how to support this education. The second thing is that I want everybody to remember, you heard it before, like you can't serve 2 masters. Everybody heard that? We have the blessing and the curse of having 100 educators, right? The blessing is you don't learn just one way, you have multiple different ways. The curse is that you don't know where to start when you've never done this before. So we spent the last year, literally, I've been in this company for a year, I spent the last year trying to dissect who, right? And people on my team, people look at different people and we keep track and who does this, who does that, and we bring it all together and we found certain people that support certain ways of doing things that are for the beginner, right? Now, I'm doing a great job at this point. They segmented, right? You can click on beginner or advanced. It wasn't like that before. But the problem for me that I have is that even if you are a beginner, you can still click on advanced. Yeah. So you can still get caught up in that, and so you still can get overwhelmed. In fact, Oren is under the advanced tab, just so you guys know, under the advanced tab. However, the way that he teaches is very elementary to me. I'm elementary too, like in terms of understanding this, right? So I'm not saying that that's a bad thing. I'm saying that's a good thing because you want to be able to understand it. So what we're going to do is we're going to talk about 3 different things, right? The first thing that we're going to do is we're going to mark up charts, and you've got to understand how to mark up your chart. That's just my personal opinion. Why? Because if you take a swipe trade, or you take a signal from a Telegram group, or you're on Facebook or Instagram and you're just doing whatever you're doing, and you're taking these signals and you don't know how to mark up your chart, you don't know whether the signal is a valid signal or not. How many times do you people say, is it too late to get in? Is it too late to get in, right? Well, why are you asking that? It's because you don't know what price is doing, right? You're just trying to make the money really fast. And I'm guilty of that. That's how I know, right? So we went through a series of correcting some of these things to make sure we understand. So the first thing we're going to do is know how to mark up your chart, and we're going to do that based on supply and demand. I say supply and demand. We're going to trade supply and demand. To me, it's one of the easiest ways, okay, to trade and see price action. The second thing that we're going to do is after we mark up our charts, then you got to know what you're looking for. Because now you got this nice, pretty chart marked up, and now you're like, okay, now what? Right? So now we have to identify entry points, right? How to know how to identify the entry points. Once we identify the entry points, the third thing that we're going to do is now we have to recognize and accept that sometimes we're going to miss that entry point. We just are. You're going to be up all night. It's like as soon as your eyes close, boom, it shoots up, right? You missed it. All right. So if you miss the entry point, then the question is it too late to get in? Well, we're going to go over some Fibonacci stuff, make it real easy so that you can see where to get in on a second or third opportunity. Everybody understand? So we're going to mark up charts first. We're going to find entry points second, and then we're going to find secondary opportunities to get in using Fibonacci and measuring pullbacks, essentially is what we're doing. We're going to be measuring pullbacks, all right? Now, the great thing I believe about this bunch, those of you guys online as well as here, is that the language I'm speaking, you guys understand it, right? Yes. Like I say pullback, you know what I'm talking about. If I say Fibonacci, you know what I'm talking about. Entry points, if I say support, resistance, trend line, if I say candle, if I say wick, okay, if I put pip, we're all speaking the same language, yes? Okay. For those that may be watching this, maybe the recording, whatever, and you're not familiar with that, you're gonna have to go to IML Academy, okay? This course is not that. We're moving forward into how to actually execute our trades, right? So go back to IML Academy for those of you guys that need to tighten up on your vocabulary. But in the meantime, we're ready to get started, all right? So let's start with this. What pair do you guys want to play with?
Euro USD.
Everybody on this Euro USD. What is it with Euro USD? Okay. GJ. Okay. Everybody wants to do Euro USD over here. So we're going to do Euro USD. Everybody on Zoom, okay? That's where we're going. That is the island we're going to. Euro USD. And what I'm going to do, because I believe that I have Euro USD marked up, I may not. That's not really one of the pairs I really follow, which might be a good thing, because we can just mark it up from scratch. Hold on, guys, it's coming. At some point, it's coming. There we go. Okay. Now, on TradingView, you guys see that there are different brokers that you can use, right? The brokers that are going to give you the best type of pricing would be FXCM, which is like FX Choice. And that's pretty much the only one I would use. You can use other ones, but I would say FXCM. Yes, ma'am. You can do that. You can do them, but yeah. Oanda's pretty good too. Yep. Those will probably be the only two. Yeah, I wouldn't use forex.com so much. I wouldn't use some of those others, okay? So we're gonna, in this case, we're gonna use FXCM. Okay, that's the one I'm on. Now, when you're on TradingView, if you mark up a chart on one broker and then you go to another broker, your markings are not there, right? So if you want to see your markups, you have to remember to stay with the same broker that you marked up your chart on to begin with. That's a big question. People are like, oh, it went away, but that's because you're just not in the same broker, all right? So I'm going to give you guys 5 steps. Say 5 steps. Okay. And I'm going to actually, you guys can see some of this. I'm going to delete that in just a second, okay? I know that you might not be able to read it all the way. Hold on, let's see. That might be the best. You don't even read it anyway, but you guys can kind of see it, yes? And you got your computer, and I can just use this as a guide. All right, so step 1, everybody write this down. Step 1, you want to pick your pair and go to the daily time frame. And what I'm telling you should be your routine. You know how in the morning when you get up, you have a certain routine generally, right? You do the same type of thing in the morning. Maybe you get up, like for me, I get up, I get brush my teeth, wash my face, I get Josiah's clothes together, get him ironed, everything. Then I wake him up, get his teeth brushed, get his face washed, put his clothes on, I put my clothes on, we grab out his stuff and we're out, grab a little snack and we're out the door. That's my routine every single day, right? These 5 steps, I want you to follow them in the same order every single time you do something. The reason is because you will build a regimen for how to do this versus randomness. And we don't need randomness. We already have enough issue with just trying to learn it. So let's create some order, okay? So whenever you go to a chart, whatever pair it is, you're gonna do what first? Pick your pair, go to the daily chart. We're gonna mark up on the daily. The reason we're marking on the daily, sometimes we'll mark up on the weekly. It depends on how active the pair is, all right? The reason why we're marking on the daily is because it gives us a bigger picture. It's like if you're in an airplane and you're 30,000 feet in the air, you can see more of Atlanta. If I then come down and I go to the top of the King and Queen building, I can see less of Atlanta. I'm still high, but I can't see all of Atlanta. So if you're making decisions from the King and Queen building, you're missing something. All right, so you have to go up higher. So the daily is gonna give us a broader perspective. So sometimes, like you're gonna have down here, right? You can see this is May 6th, is that right? Where we at? Yes, July 18 right here, right? June last year, then we're the year before that, on and on, right? You can see more of the days on the daily, all right? Second thing that we're going to do is, after you have your daily and you have your pair pick, what you're gonna do is now you're gonna find your high and your low. Everybody say find the high and the low. Find the high and the low. I like to use the examples of sports because most people, even if you don't understand all the intricate details of the actual sport, you know that there's a court or a field that people are playing on, right? And if you see a football field, everybody knows there's a line that designates out of bounds, right? There's a line, if you're sitting in the stands, there's a line on the other side of the field, right? A white line, and there's a line on your side of the field that if the player is running left to right as you're watching, if they step on this line, they're out of bounds, right? So if you think about this as being our field, the high and the low, that's like a top out of bounds and a bottom out of bounds, okay? Just conceptually. Price can go outside the line, but you're trying to play within the lines, right? I'm saying like we're trading in a zone. You might have to. You might have to. So for example, we pull up Euro USD. In fact, let me erase everything on my chart here. Hold on. Okay, so I've erased everything on my chart, right? I'm on the daily. Now, really what you want to do is you want to see what you can see inside your window, okay? But if something doesn't make sense, for example, let's say you're in your window and all you see is this, right? Okay, you know that's not the high because you see there's something over here. You guys see what I'm saying? You know that's not right. Is it the high within what you see? Yes, but is that the high? No. So you're gonna have to go back, all right? So now you're gonna go back, and as you go back, you see something like that. Now you see price coming from down, creating a high. Y'all see that? So now we have a high. We can see a high, and where we are right now, this is what I like to do. Wherever price currently is right around, still I want to go back because this is the most recent low. That doesn't mean that's the low. It's the most recent low. So I still like to go back just to see if there's another low. It's just like a double check. Is that a low? Yes. But all of this data back here came from somewhere already. So let's see if we can find another low, right? Until you find the low. Right? This is why I say sometimes you might need to go to the weekly, right? So you can see more. All right. You guys see where we are now? See that? You can clearly see a high and a low now, can't you? You clearly see a high, we can clearly see this is the low, and we can clearly see that's the high, and price is now in between the two. You guys see that? Okay? So when we're on our high and our low, what you're gonna do on your trading view is you are now gonna go over and get you a horizontal line. Go get you a horizontal line. For the sake of this, I'm gonna make my line white so everybody can see it. I'm gonna make it kind of thick, all right. You guys know how to get a horizontal line? On trading view, everybody know how to get a horizontal line? Gonna mute you guys out, okay? All right, so boom. Now, the high is gonna go at the top of the wick. Why? Because that's the highest place price went. Did it stay there and did it close there? No. But did it go there? Yes. Which means that it could potentially do what? Go there again. And wouldn't you want to know that? Okay. So that is going to be the high. Okay. Then you're going to grab you a horizontal line. And you're gonna put yourself a line at the bottom of that wick, which is going to denote your what? Your low. Now we're playing a game within a boundary. You see that? It's not randomness, it's within a boundary.
So if you go back a day on the chart, and you shrink it down, but you see another high that was probably that 2007. Is that considered to be a high?
It's not, no, because that's too far, right? Because this low, this is 2017. That's good enough for now, right? For what we're doing. Yeah, we don't need to go all the way to 2007.
It's actually 14.
Could you put it like, here's the thing. There's an art and then there's a science to it, right? Now look, see if I scroll over, this line is still being supported over here. You guys see that? So, and then it's coming from up there. So it came down, it consolidated pretty much, right? All of this is weekly now, right? It hit this line and it went back up. I'm okay with that being a low.
Okay.
Like it's a comfortability level for you, right? Now, if you're uncomfortable, if you feel like price is just gonna drop, then just put on a line somewhere. But for me, I'm okay with this because where price is right now. Where price is right now is that we're in between that line. So we've got some time to go before it would break through that line. You understand? This is a weekly chart. Weeks. We're in the middle. It can take weeks, right? You're okay. So we go back to the daily chart. You could still zoom in a little bit if you wanted to, right? And you can see it there still. Right, everybody comfortable with that? Okay, step one is what? Daily chart. Step two is what? Okay, step three is we are going to look for bullish and bearish engulfing candles. Okay, we're looking for bullish and bearish engulfing candles. Why? Because we're trading supply and demand, remember? So we're looking for a big bullish candle to come from the bottom and go up. And then we're going to be looking for big bearish candles to come from the top coming down. Now at the bottom of our chart, guys, this is when we find the bullish engulfing candles, that's going to be our demand zone. Everybody say demand zone. Everybody understand supply and demand. Okay, if there are a lot of US flags available and there are virtually no buyers, what happens to the price of the flag? It goes down. We have more supply than we do the demand, right? The people would indicate the demand, the product indicates the supply. So if we have more flags than we do buyers, we got to drop the price. That's a supply zone, right? Price, we've got more than what we can't get it off, right? We've got to sell it. So price has to what? Drop. It has to drop so that we can now pick up more buyers. So while it's dropping, people are selling off. Selling. And who we're talking about, really? The banks, the hedge funds. We're not talking about me and you. We're talking about the big boys and girls, right? What the bullish and bearish engulfing candles designate are that if you're on the daily chart, because you can see them on an hourly chart, but it's not a big move. It looks like a big move on the hourly chart, but if you go to the daily chart, it's a little bit okay. If you're on a daily chart or a weekly chart and you see a big candle, that's a real move. That means the bank has done something. And we would think about it like this. If you're in an ocean and you're in a little bitty old rowboat and you have a big ocean liner that comes past, doesn't it make sense to let the ocean liner go past with all its power and you find a way to get in their wave? And you ride their wave because you don't have as much power, but you're getting where you need to go. Does that make sense? The bank pushes the market a certain way, and what are we going to do? Ride the wave. We're not making the move. We're going to catch the move. Everybody understand that? So that's why we have to wait until we see the bullish or bearish engulfing candle. All right? So let's find these candles. Now, real fast. What kind of candle are we looking for down here?
Bearish.
No, bulls. We want to push up, right? And what kind of candle are we looking for at the top? Bearish. Bearish engulfing, okay? Let me explain what an engulfing candle is. Josiah. And I like this example because Oren does this example, right? Because he's short. You guys ever see Oren? I'm tall, but Oren still is short. We're just like, come here, come Okay, right here. So now, Josiah is a candle. Set him straight. You a blue candle, I'm a red candle. Okay. So he's a candle and I'm a candle. You see how his whole body can fit into my whole body? I am a bullish engulfing candle. This is what an engulfing candle looks like. Right? Everybody get it? Yes. The whole body of the previous candle has to fit inside of the next candle. In other words, if you're looking at your chart, you want the candle to your left to be smaller than the candle to the right. And the candle to the left, the whole body of the candle must fit inside of the candle to the right. Right? We clear on what bullish and bearish engulfing is.
The wicks
are just going to help us as guidelines, but we're looking for the full body. because the body represents where Christ opened and closed. So we want the price to open and want the price to close within the opening and closing of the big candle. Okay? So where we're gonna start is we're gonna start in our bottom area. So we're gonna start here, and we're gonna kind of just move our way this way, that way, until we find this bullish engulfing candle. It's not gonna always be exactly at the line. Like some people are like, that's a good example right here, right? So Lawrence has it, right? Do you guys see? Bullish, that's what I'm saying, right? The whole body. But those of you guys on the internet, hold on. Y'all know. Y'all can Google it on the internet. You can Google it, right? Just in case. See? They don't have to be even. The whole body just needs to be inside of it. But a lot of times it is going to be even. All right? So now what's going to happen is we're going to start our search down here. And we're just going to find in all of these different candles where we can see a bullish engulfing, right? So I'm gonna zoom out and scoot over. Okay. At the bottom here. Okay. Now, I see a couple. Do you guys see any? Bullish engulf. Who sees one? Okay, come up. Let me see.
All right, don't take me a second. Is that included in the wick as well?
No.
Just the body.
Just the body. We've got a volunteer coming, okay? So show me a bullish engulf. That is a bullish engulf. Everybody agree? Yes. That is a bullish. Show me another bullish engulf. That is a bullish engulf. Okay? Come closer this way to me and show me another bullish engulf. That is a bullish. Everybody see that? Yes. There's multiple bullish engulfing candles.
Yeah. That second one he did, it looks like it came down after the.
Here's one.
That's one,
Right? But we're looking for demand, right? So this is a bit, now here's the thing, sometimes the candle looks small, right? Like this green candle, this bull candle looks small. If you are unsure if that qualifies, even though it's engulfing, but it looks small, it's gotta be at least 50 or more pips, that one candle. So you can measure that candle. If that candle is 20 pips, don't mess with it. If the candle is at least 50 pips, 50 to 100 pips, that's a,
On the daily chart.
on the daily. That means in one day the market went up 100 pips. That's a move. 50 to 100 pips, right, or more, right? So if we looked at that candle and I measured that candle, y'all see that? It's like 38 pips. This candle right here. So I personally wouldn't leverage that as the bullish engulfing.
The one that he pointed out before that one, after you see the bullish engulfing candle, it turns into various candles. But it didn't retest. You wait till it retests before.
Well, we're not there yet.
Okay.
We're not there yet. Okay? That's okay. We're not there yet. Okay? So I would probably, even here, like this zone, I would probably work with this one. Y'all see that?
Yeah.
Here? Oh, yes, that's one. I didn't even see that one. Perfect. That's exactly where, so the ideal scenario is that you can find it somewhere in the lowest area. If you can't find them in the lowest area, sometimes price plays around. It's like a fake out down there, right? And it comes back. So if we can find it down here, that's gonna give us a little bit more confirmation, all right? So does everybody see the bullish engulfing, the one we're talking about right here? The date is October, what is it, October 28th, 29th? 28th is the bull, is the red candle, 29 is the bull candle. Right here. Okay, online, does everybody see the bullish engulfing candle I'm talking about?
What day are we in?
That is October, no, I'm sorry, December, sorry, December. Lord, I can't read. December 28th and December 29th are the two candles we're looking at. This is of 2016. Everybody see that? Okay. On the daily. Can you help her out? Okay. Everybody get the bullish engulfing candle? All right. So what we're gonna do now is we're gonna do, as On Rice says, we're gonna box it up like Chinese takeout. Okay? So you're gonna go over to your tools and you're gonna get a box, a rectangle box. In order to get that over here, you've got, oh, you can't see it.
This is December 16th.
December, yes. Hold on.
2017.
Okay. You guys see your tools right here, right? This one looks like a little brush. Click on the arrow next to the brush, and then you'll see a rectangle. Grab your rectangle. Now, the way that I like to do it is once I click the rectangle, you're going to then have, and mine is up here. The settings for that rectangle, on yours it may be somewhere else on your screen. Just kind of depends on how things are set up for you. But you guys see what I'm talking about, right? I'm gonna drag it down because I can move it. You can move it. See right here? Oops, not that. This. Y'all see that? Where it looks like you can change the colors. In the demand zone, because that's where we are, I like mine to be green. Because in my chart, green represents the bulls. Okay? So what we're gonna do is we're now going to take our box and we're gonna start at the top of the candle in front and go down to the bottom. So in other words, we're gonna grab the body of this bull, of this bear candle, right in front of the bullish engulfing. And you're going to box it, okay? You guys getting this online? You boxing it? All right. No ma'am, just the bottom.
So
You got it?
we're doing both candles.
Well, you're boxing up the red candle,
Okay.
but it's going to cross through.
Okay. The first
Correct.
one. Okay.
The candle that's being engulfed is what you're, the small one. The body of the small one. Yes, this is your candle you're looking at right here? This red, this blue? Yes. So there you go. So you're gonna box it like that, exactly right. You got it? This your candle right here? Yep, you got it. But wait a minute. Your low is still, where's your low? Is this red line your low? Your low should be at the bottom of the wick. Your lows are at the bottom of the wick, guys. The low is at the bottom of the wick. Remember what I said? Price could still come down there because it did that before. If you put in a buy, for example, and you don't know that this wick is down here, you're gonna go negative, you don't even know why you're going negative.
So, yeah.
You do not include the wick when we box it. I was just
Okay.
making her low more accurate. Side. Okay, now that you have the box, we need to extend the box. So if you click on the box, and if you go up to the wheel up there in your settings, that wheel, some of you guys know how to double click. You can double click it, the box, that's fine. Or you can click the wheel for the settings. When you click those settings, you want to see coordinates. You guys see that? And what we want to do is we want to extend this box all the way into the future, and we want to extend this box all the way into the past. Why? Because we don't want to have to keep marking up this chart every day, do we? If we can just extend this zone all the way out into the future, that means this time next month, when you look at Euro USD, you still should know where the demand zone is at, right? Okay, so the way that we're gonna do that is in the top, okay, you see what says price and then bar, hold on. Right here, this bar, take the negative out, if you have a negative there, take the negative out, and then at the end of that, put like 2 more ones. We don't know how far in the future it's going, it's just going far. Okay, it doesn't matter, just goes far. Okay, go down to the second one, leave the negative there, and you can put 2 more ones. So now this bar is extended years probably this way, and now years that way. Everybody saying that? She's making that face, hold on. Okay. All right, let's workshops now. Okay. All right, so where's your wheel? Oh, your wheel. No, okay, yeah. Yeah, but that's, no. That's not the wheel. Yeah. Cancel that. Okay, click on your box. Click on the box. Now you got the wheel. Oh, okay. Click on the box. Now you come over to coordinates. And now you're going to take that negative out at the top. Take it out. And then put like a 1, 1 at the end. So 1, 3, 7, 1, 1. Okay, now come down, leave the negative there because I don't want it to pass, and put a 1, 1 at the end. That's going to go the other way. Coordinates. Okay, so you have to, you're on the line. You have to click on the box. There you go. Click on the corner of the box. Okay, now. There you go, right here. There. You take the negative off the top one, put 2 1s at the end. 2 1s at the end, just 1 1. Okay, and then keep the negative at the bottom, and then put a 1 1 at the end. Okay, now fix your box so that it's back to the engulfing. And you might want to make it more transparent so you can see. Okay, so click on the box. Just try to click on the top line. Okay, there you are. Click on the port, click on the wheel. Oh, I'm sorry. You can I see right here? More transparent. Or whatever it is. Uh-oh, they're working. Go to, okay, click on it.
Double click on the line, hit start. Just double click on it, hit start. Go to that. Get that bottom. Oh,
There you go. Perfect. Okay. Oh, thank you. Okay, everybody got the box. Okay, online, y'all have the box. Okay. So, what this represents is what? No. Demand zone. Demand, right? Okay, remember I gave you an example of what supply zones are. Demand is, oh my God, my realtors, right? Oh my God, we don't have enough houses, but this is a buyer's market. When it's a buyer's market, right, and it's not enough houses, what happens to price? It goes up. That's why it's the demand zone. At the demand zone, price goes up. Right? It creates bidding wars. This one 10,000 square foot house is for sale. I got 5 people that want the house. I'm starting here, and whoever give me the highest, that's what I'm gonna go. That's demand. You understand? Demand is when you have more people than product. Supply is when you have more product than people. Okay? It's like our basic economic stuff that we didn't really realize was important because we didn't use it until now. We're like, oh, I remember that. Okay? So demand zone. So what happens usually when price hits a demand zone? It bounces off and goes back. That's just what it usually does, which is why we want to know where it is. So if you're looking at price and you see it heading towards a demand zone, you already know in your mind, based on the things we're going to talk about in a few minutes, that price just might get in this demand zone and turn around and come back up. So ultimately, you need to wait and see what it's going to do, right? Okay, so everybody have demand zone. And now if you go back to where price currently is right now, if you go back to where price currently is right now, oops. If I zoom out a little bit more, we got a wow. Look at this. You see, look, we got a wow before price hits that demand zone. You see that? But we know, at least we have a boundary. Dump the market up again. Now, sometimes some stuff happens, your chart might get blanked out, but this is why we're going with it, so you know what to do if you do it again, right? 100% no, but you know what to do, okay? So now you know that's a boundary. So now let's do the same thing at the top. Let's go ahead and let's create our what? Supply zone. So now we see our high point, right? And we're looking for what kind of candle? Bearish engulfing candle. All right. So who wants to come show me a bearish engulfing candle? Come on, Bonnie. Let me drag this chart down some. Go, Bonnie, go. Go, Bonnie, go. There you go. Everybody see that? Yes. Bearish engulfing candle. Do you see another bearish engulfing candle? Yep, that's one. Do you see another one? That's one. Here's one too. Yeah. Okay, so you guys see there's multiple. Okay?
Now, this one wouldn't count because it's got that little bitty red one.
Right, let me make this point. An engulfing candle is designated by the previous candle being the opposite color, number one. Okay, so you're not going to have an engulfing candle where both candles are red. And you're not going to have an engulfing candle where both candles are green. Price has to have been in the previous candle going the opposite direction, right? And then the bank moves, boom, sell off, right? Or boom, buy, okay?
Well, we're looking for the highest point.
The highest that we can find, yes. So if we see this one, that's better because it's closer to our high, right? It's closer. But are these still zones that you could mark? The answer is yes, because price could still move in those zones. And wouldn't you want to know if this was still an area where price was selling off? In other words, price could come up to an area that's also a supply zone, like right here. You see that? It can come up here and it could drop back down. Why? Because that's still a supply zone right there, even though our main supply zone is up here. That's still an area where banks sold off. Like they might sell off, and you guys know how like real estate, right? The reason I do, because I have a background in real estate too. But so when you have big developers, right? They might sell off or buy chunks at a time, right? It doesn't mean because they bought one chunk, they're not gonna buy another chunk, or they sold one chunk, they're not gonna sell another chunk. It's just, right now I sold off 20 lots. Right, now we're gonna see what's going on, we're gonna have the people develop it, okay? Now we're gonna sell out another 30 lots. Those are still supply zones, but we have to get through this phase first. Phase 2, new development, phase 1, phase 2, you understand what I'm saying? Okay, so that's kind of this right here. Price could come here, right, supply zone, especially if that's over 50 to 100 pips, right? In this supply zone right here, this candle, in this particular area, in the daily, oh, this candle only 26 pips, that don't count. All right, this candle that we were just looking at that Bonnie pointed out for us, 100 pip candle. Look at that, right? Does that qualify? Yes, it does, all right? So now we're gonna box this up like Chinese takeout, stop, Josiah, as well. But this time I like to use my reds, right? Just because it's the supply. So now we're gonna box up the green candle in front of it. The body of the green candle, okay? Your box goes around the body of the green candle. We have a high up here, gives us a marker, but we're boxing up the supply zone. Okay. Then, what was the date of that one? This candle date, February. Okay. So now what I'm gonna do is I'm gonna double click, hold on. I'm gonna double click on my box and I'm gonna extend it out. Or you can click your settings. Remember, on one of them, you have to have negative, all right? Or else it won't go in the past. Josiah, do you have your supply zone marked up? Okay.
Do you do your horizontal line at the top since you're filling it? You know, the bottom you do it green.
Just my high and my low?
Yeah.
No, I don't care.
Okay.
Personally, because that is just, it's just almost like a support resistance.
Right.
I mean, you can.
Yeah.
Listen, if you have waves, colorways that make it easy for you to see it, if you want to do that so you know, hey, this is a high of my supply, go ahead and make whatever color. As long as you have the right line, I don't care what color. Okay? People do things, different colors, different lines, different whatever, so it's whatever. I just want you guys to get the framework of what we're doing. Okay? How y'all doing online with the supply zone? Good? Let me see. Let me look at the chat. You're good? Okay, chat, everybody's good? Great, you're following? Awesome. Awesome, awesome, awesome. All right. Got it? Supply zones, supply zones. You got it, Mom? Supply zones? Almost, you getting it though. There you go. Okay. Then you come up here. Yes. Here, click on the corner, or hover over the corner. Well, click out if you're clicking on something. Okay, click in the white. Okay, now come over here. So you have the box. Okay, click. Okay, now come over here and hover over. There you go. That circle. Click on that circle. All right, now come over here to the settings. Oh wait, yeah. Cancel. You're right. Okay, now come up to this circle and drag it up. Okay, now come over to your settings. Okay. Okay, coordinates, there you go. Well, she can leave that one, and then the negatives you can put at the bottom. As long as one of them is negative. And then put a 1 or something at the end. Wait. There you go. Now, bam! Got it. Okay, you got it? All right. Patrick, you got it? Okay. Everybody got your class on now? Y'all good? Happy? Thumbs up? Okay. I don't see the exact date, but it looks okay. Everybody, they're good. They're good. Okay, follow along. Perfect. Okay. So now we have supply and demand zones. That was step number what? 3, right? Yeah. All right. We got 2 more steps, y'all. We almost done with this part. Step number 4 is now we have to do our support resistance. Everybody say support resistance. Our support resistance that we're most concerned with would be between our supply and demand zones, right? Don't we want to know where price is consolidating or pulling back and all of that? Don't we want to know that? Yes, we do. So the easiest way to identify that is go over to your line chart. Now, the way you do that is you see this icon up there, looks like the 2 candles. Y'all see that? If you click on that, if you click on that, it'll give you an option to go to a line. Choose line. See this right here? Click on that, and when you click on it, it'll let you choose line. Now, your line chart, ladies and gentlemen, does not include wicks, which is okay because we're looking for where price opened and closed at. You understand? This is support resistance. So what makes something a support or resistance line is at least 2 touches. So price needs to touch it at least twice, right? So if we're going to start at the top and work our way down, right? Or start at the bottom and work our way up, I suggest doing one or the other, not trying to do it all in the middle and going all crazy. Your brain is not going to process that, okay? So let's just start at the top and work our way down for the sake of this, right? So we're going to start at the top. We can already see that the top of our box is really a support resistance level, isn't it? You guys see what I'm saying? If you ever need to check your work, then it should match. Okay, if you are at the width for this, it would be higher than that. You understand what I'm saying? So we've got 2 touches at least on that top line there, right? Good, okay. I just like to grab white lines. You guys can grab whatever color line you want to designate your support resistance. But I'm just gonna grab a white line, okay? And I'm just going to kind of take my time and gradually look for areas where price is touching a couple times. Now look at this line right here. I'm gonna make these a little bit thinner. Hold on, so you can see them. Oops. And I'm gonna tell you what I look for. And everybody's chart is gonna be a little bit different here, okay? Because you see what you see, okay? Now, why I like this line is because you see how this point hit here? It was a support line right here, wasn't it? But it was a resistance line right here, wasn't it? See that? It came through, it crossed over, but then it was a major resistance. You see that? It hit that line and dropped. So if I can find areas that it's touching at least 2 times, but especially where it's a support and a resistance line, that's a major level. Okay? So keep going. Okay, at home, are you guys doing okay getting your support resistance done? Now, sometimes you might need to move your chart over some, right? If you're not sure about a level, move your chart over. There's price doing something somewhere in the past. You don't have to go too far in the past, but somewhere in there. Both. You're looking for peaks and valleys. Now, let me just also say this. Here's a clue, an idea. Okay, remember we're looking at the daily chart, right? One way to train your eye is if you look, for example, on the daily, down here, for example, right? Price went down here and it went up, and then it turned around and then it went up again, right? If you look at this area where it went up before it turned around, look left and right to see where else price did that, right? Your major, like it went from here to here, then back down to here, then up to here. Y'all see that? It's kind of like, it's just like a little wave. Look at those waves right here. Here, and ultimately it went all the way up to here, but in between it went here, here, that little one maybe, but it went here, right? It went down here. When it came down here, did it come down here again? Yes, over here. You see what I'm saying? So you'll see some things, you won't see some things. It's the daily. I will tell you that when you mark up on the daily, remember what I said, it's only designed to give you an aerial perspective, okay? When you actually start placing your trades, you're gonna probably be down on the 1 hour. We'll get into that. But this is giving us our boundaries so that we know where we are within the 1 hour. If we're in the 1 hour, we don't know whether we're coming up on a supply zone or not. That could hurt us, okay?
You look for areas where they touch at least twice, right?
That is correct. Where price touches a peak, a valley at least twice. Y'all want a Euro USD? You got Euro USD. Oh no. Everybody wanted it. Yep, you can have a lot of lines, Euro USD, it moves.
So what is your favorite?
I like GU, I like GJ, and I like GA. Jamie loves Euro USD. He loves crypto too, so.
I like that too.
See, this is the work nobody wants to do. How many of y'all actually been doing this every time before you take a trade? You understand what I'm saying? This is what I mean about the prerequisites. Right? That's what I was saying that day.
This intense. I did like May,
Yes, sir. Because I got this line here and that one here. And it's a little bit of a switch right there, but that's the main one. That was as long as they're touching 2 points, remember you're on the daily. When you go down, you're not gonna see them as much. They're gonna be far in between, you know, more so. But I'm telling you, it's better to have your lines on your chart so that you know where price is moving than not have your lines. If you don't have your lines, that price could turn on you. You don't know why it turned, right? You didn't have it marked up. If you just have lines everywhere and they're not touching, they're not meeting the rules, that might be too many. But if they're meeting the rules, then trust your gut. Josiah, did you mark up your support resistance? Did you mark up your support resistance lines? Okay. Yes, sir. This your money. Now this is me because I like accuracy. You know what I'm saying? I don't know how meticulous you are. I'm meticulous. I want to, even if I don't take the trade, I want to have an idea of what it's doing, right? But see, I'm almost there now, right? Ooh, hallelujah! I almost up to the man zone. Okay, you too, buddy. Yeah, just in between the zones. That's all we're focused on. Y'all tired yet? Ooh, like y'all been running 2 miles. Okay. That's probably okay. All right. Now, just looking at this, right? Just looking at this, and you see price, the market's closed right now, but you see price, what it's doing. What do you think could potentially happen at what the price is getting ready to do right now? Orange, I told him, Smother, can you call Orange for me? He can read too. So 4. Oh yeah. I just told y'all I'm meticulous. When he was 4 months old, I started him on your baby can read at 4 months. I was just letting him sit in his rocker and watch the information and internalize it. So in school now, he's reading. His teachers are like, oh my God. Like, you gotta watch your phone, anything, he reading. Okay. Look, hide your phone. You gonna know your business now. Okay, so we're saying, hey, look what price already, what is it doing? It already broke past that previous line, right? The one right above it, see that? At least on my chart, right? And it's going down. Now, it can do one or two things. Let's look what it did before, right? What did it do before? Last time price hit this line, what did it do? Bounced up, bounced up. Last time over here hit this line, it broke through, right? So we know we need to be looking at this line, don't we? If you're doing something with Euro USD, you know you need to be looking at this line. We'll talk about what to look for in a second, but everybody got it, at least got the gist of what we're doing. Okay. All right, that's the hard part. That part is hard. Okay, online, y'all got y'all support resistance lines done. Okay. Let me go over here to the chat. Let me check out everybody in the chat. Yes, 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 yes. Everybody's good on the chat. Awesome. Awesome. You guys following along. Is this making sense? Hopefully you're taking notes, right? Remember what I said. You're gonna do the same regimen every single day. If you want to choose a new pair, you got to go through these 5 steps. Or you can just stick with the pair or 2 that you have and just run your check every day. You don't have to do this every day. You mark this up and it's done. You mark this up, it's done. That's why we've extended our lines forever and all this stuff, right? As Oren says, the lines will make sense in the future, right? It'll make sense in the future. Why? Because price is going to start showing us it's going to be respecting these lines. Oh, okay. Okay. Oh, dang, I thought y'all was going to get Oren today. He lives so far, though. The boonies. Okay. Shanika says, mark it up, forever yours. That's right. Okay. So now what we're going to do is you can come back to your candles. Go back up there. Go back up here. And go back to your candles. Now, when you go back to your candles, it should start looking like it's making some sense to you. Y'all see that? You can see what price is doing. I can see clearly this thing went down to this wick and turned around, right? So you know how sometimes people like perfect entry, right? Wick entry. How you getting a wick entry? Because I have a line right here that told me that's probably where it's going to turn around at. Now, could you put in an order right here? Yes, and go negative a little bit and still benefit on the buy? Yes, but somebody like me, I'm trying to wait and minimize that risk. I just want to minimize the risk. Do you have to? No. If your account is $200 million and you don't care about that, then fine. But most people start out with smaller accounts, $500, $1,000, whatever, $20, $10. If you're on a $10 account, does it matter whether you get in here or here?
Yes.
Yes, it does. A $50 account, does it matter whether here or here? Yes. So it matters. So you learn your discipline with the smaller accounts. You know what I'm saying? I mean, it could be a good thing, it could be a bad thing. I don't know. I'm just saying. It matters. All right? So we got support resistance done. Step number, what number are we on? 5? 5. We're going to track the market. Say track the market. So that means we're going to draw trend lines. Okay, we're going to have 2 major trend lines. Now, you can still draw other trend lines in between, but we're gonna draw our major trend lines based on and relative to where price is right now. So what we're gonna do is we're gonna look starting at the top, right? Starting at the top. And ideally, we wanna look for our high point, right? Price went to this point and then it started making its way which way? Down. So we're gonna draw us a trend line down. In the middle of drawing the trend line down, you're gonna recognize that price got a little bit steeper in here, didn't it? Yes. So that means if we draw a trend line from up here, down at this angle, so I'll probably do like this, right? Yeah. But then you'll see sometimes people draw a trend line from here, down like this, right? Because you're still trying to gather where price is going and where the breathing room, essentially, right? The breathing room. So we're gonna start with our outer trend line, okay? Now the way I like to draw the trend lines, over here on the side, that same little one where you get your horizontal line, this line right here, if you click over on the arrow and you go down to the ray, okay, click on the ray, what will happen is you don't have to draw the line. You just get to point and click, which makes life a lot easier, right? So now, if I've got me a point and click line, I've got the line, and y'all see how it's doing like this, right? So we're gonna start more horizontal. So you click it at your top point, and you start horizontal, and you start dragging your line down, and the first point that it touches is where you stop. Probably right there. Because of this little right here. So I started up here, and I drug the line down until I touched the very first point, which happens to be this one. Got it? See it? No? No, this line right here. Click on the arrow. Not the line, click on the arrow. Okay. You're gonna be dragging your arches in. And it'll give you a chance to now drag your ray down to the first point. Start like this. Start horizontal like this, right? You're gonna come down. Looking at it, give me a high on price. Tell me when I touch something. No. Stop. No. Okay. Y'all got it? So this line is like the main trajectory that we're gonna probably reach, right? Price in here, but then we drop so steep that we're probably gonna stay here, we're probably gonna go up, whatever we're gonna do until we get over to this trend line. We got a while to go, right? Y'all see that? So what we can do is now we can draw another trend line. Well, before we do that, let's just track. Let me give you the main two lines, okay? So that's the main downtrend line. You start with your ray, you go straight across, and you drag your ray down till you touch the first point. Okay? A wick, ideally. Now, what some people like to do, which is perfectly fine, is go to the line chart and do that, right? And at least you're getting where price is coming through. The only problem I have with that is it doesn't account for the wicks. And the wicks kind of matter. That's just me. You see what I'm saying? So what especially on my team, what other people do is they create two different lines. So they'll make, let's say, this line, this color for Wix. Then they'll go onto the line chart and create a yellow line that denotes price. And in their mind, they know that price could actually go anywhere in between those, yeah. See what I'm saying? That makes sense? Okay, so if you want to do Wix, that's Wix. If you want to do price, you can do price. If you want to do both, because it makes you feel more confident in seeing the parameter of where price to go, put both. Okay? All right, so we got the one done. Now we got to move our chart up, and now we've got to have another line, don't we? Because don't we have a demand zone? Okay? So what happens is sometimes you can't always see it. In this case, we can still see it. I zoomed out enough where we can see it. Right? So now I'm gonna start at my demand, at my low point. I'm gonna get my ray. I'm gonna do the exact same thing, but I'm gonna go up. So I'm starting, oops, not that, sorry, hold on. Oh shoot, let me do that. Get my line back, okay. So here, I'm gonna get my ray. Wait a minute, why do I want me to do it? Hold on. There we go, okay. All right, so now I got my ray. I'm gonna start horizontal, right? Y'all see this? And I'm gonna keep going with my line until I touch what? The first point, which is kind of like right there. Y'all see that? Okay. Now, if I scoot over, you guys can see how price is aiming towards that little triangle. Y'all see that? Let me make sure y'all have it. Yep, at your low. Start at your low. And come all the way up until you touch the first point. But you got to zoom in because you can't see enough of the candles. If you can't see your candles, right? Because we're trying to track where the market has already gone, where it is right now. Everybody get their two lines drawn, two trend lines? This is where we're tracking the market. Y'all see this? So we hit here. What we can expect is that price is going to come up, bounce, come up, right? Until something. Yes, sir.
Kind of looking at a couple of charts.
Yes.
Some of them, our line has already broken through the rate that we just put.
Did you start at your low point? Okay, come over. This, okay, not your arm. Take your right. Grab your right. Now, come back horizontal. Okay, now if you go horizontal, that's the first point you touch it.
Okay.
Out of all the price, the first point we get to.
Okay, gotcha.
That's gonna be your hour boundary. Now, can you draw another trend line within there? Yes, but we want our boundaries first. Because see, if you just draw that trend line that goes through there, you can see price came outside of that. Which meant, if you didn't know that, you could have been caught, essentially. So we just track the market, you see that? It's gotta stay, it's gonna probably, it's got to. But you can't see one market. So you don't have to.
This is your first tap.
So now, you grab your array. You grab your array. First point we get to the key, okay, let me just say this. The key to your trend lines, guys, is you got to be able to see the market. You understand what I'm saying? If we don't draw a demand zone, you don't know where to start the trend line in the first place. If we don't draw a supply zone, you don't know where to start the trend line in the first place. So we know that price is doing something within our two zones. So you want to be able to see. So sometimes put on the side, someone have like smaller computers and this like that, whatever, you might need to go to the weekly. You see what I'm saying? Instead of like going crazy trying to fit it all in on daily, go to the weekly and see what you can see. But you got to be able to see the market, okay? Now, this is where we track the market. In other words, we're expecting price to stay within these lines some kind of way. And at some point, it's going to break out one way or the other. It's going to have to break to the upside or break to the downside. You guys see that? So if you were going to be an analyzer, is that what? Yeah. If you're going to be an analysis, I'm not an analyzer. Okay. If you were going to be an analyst, if you're going to be an analyst, don't you now have a much better view to make an analysis on versus guessing? Do you feel better? So what would someone say about price? Just looking at all 5 of our steps, where we are, if you were on the play-by-play, you on ESPN, you giving a play-by-play of what Euro USD is doing. Knowing what you know about supply, demand, what would you say? Well, back in 2017, we were down at around.
Yeah.
Keep going, somebody. I'm listening. Somebody, where's my analysis? My analyst.
What was your question again?
My question is, give me an analysis on Euro USD from what we've done so far. Not a dollar, because those are pips.
Oh.
At 1.82. Yep. And then we what? We rallied up, right?
Yep.
Right, we had a little bit of we hung out somewhere in the middle, somewhere around where? A little choppy, right? A little choppy in between 1.609 up through 1.206, right? But we had a strong rally from 1.194, all the way up to a supply zone, topping off at what? 25432, roughly, right? We hit that high point, we had some consolidation, and we had a strong sell-off. In other words, when you hear the news, is what I'm saying, because that's what they're doing. Or you're on TradingView, and on the side, sometimes they're giving you somebody who's done a report or a summary of what Euro USD has done. I want you to be able to read that and at least understand it. If you don't completely understand it all the way right today, if you keep reading them and you keep doing this, you will start to comprehend what they're saying, right? If you're listening to the news and you hear, they don't talk much about foreign exchange, I don't talk about stocks, but if they throw in some Forex information and you're washing dishes or you're, getting something ready on the patio and you hear them say something like the dollar is actually rallying up and you follow Euro USD, what should you be expecting Euro USD to do if the dollar is rallying up? Euro USD should be going down, shouldn't it? You gotta be able to hear and interpret this. You guys understand what I'm saying? Like, this is for real. If they say the dollar is dropping, right. Trump went up there, got into an argument with the Chinese, and everybody was mad at the United States. And everybody started pulling their money out of the United States. What happens to the dollar? It goes down. Confidence in the dollar goes down. So if the dollar is going down and you're in Euro USD, what could you expect for Euro USD if the dollar is going down?
Euro is going up.
The euro's going up. Why? Because in our pairs, the first pair is called, the first currency is called the base pair. The base pair is reflective of what the price is doing. So the euro, if the market is going up, the euro is going up. If the market is going down, the euro is doing what? Going down. The secondary pair is opposite of the base pair. So if the euro is going up, simultaneously the dollar is doing what?
Going down.
Going down. So we don't live where we trade, where we use euro. We're going to hear more news about the dollar. So when you hear them say, oh, the dollar is strengthening, that means the dollar is going up. If the dollar is strengthening and you're in Euro USD, you should be looking at your chart and assessing that the market is probably going to start doing what? Going down. This is why it's so great to pull out your cell phone and see what's going on. You guys see what I'm saying? All right? So we just track the market, all right? Now those are the 5 steps. That's what you do every time you get on your charts. Now tomorrow, your USD is already marked up, isn't it?
Yes.
So you don't have to do anything tomorrow, market's closed anyway, so it opens up at 5 o'clock. When it opens up, what Chris Terry teaches really is you need to chill for like 2 hours. It's like this, when you wake up in the morning, you just jump straight up and you're ready to go. Okay, snooze, get out, drag a little bit. The market does the same thing. It's chilling, it's getting itself together. It's, first off, the market never closed, it just closed for retail traders. You understand what I'm saying? It's closed. That's why you can wake up and price will be down here when it opens up. Because the banks are still trading. You're not trading. That's why some traders, retail traders, don't trade or don't have trades open during the weekend. Depending on if you're in a long swing in the middle of the night. But the banks are still trading right now. We can't see it though. So when the market opens at 5 o'clock, the market opens up here and hit your stop loss. And now you lost. Or opens down here, hit your stop loss, now you out. You see what I'm saying? So the market is still moving, it's just closed to retail traders. So you wait for a couple hours for the market to adjust itself. And what it usually does is they call it closing the gap. Sometimes what the market will do, like if it opens up down here, it'll play around and at least it gets to a point where price was before it closed on Friday. Now at that point it can shoot up or go down, right? You have your analysis in place. But it'll probably try to close the gap. Some people do what they call gap trading. They look for certain pairs that actually gap when the market opens, and after about an hour, they get into a trade in the direction that will close the gap. Right? It's like a correction. All right? All right, online, everybody have this. Let me go to the chat. Everybody have this online? Okay? Good, 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 good. Okay, so let me get some feedback now. So just on this, was this helpful?
Yes.
So let me just kind of go through. So what makes this different now than when you didn't do this before? Why is it different? Why is it better?
You can see.
Yes.
Yeah.
Okay.
You kind of know where you are in the market.
You know where you are in the market. And that's like half the battle. You can still choose a wrong analysis and go the wrong way, but at least you're not blind doing that.
I guess.
You're not guessing. What else?
See, this is 4 hours and stuff. I've gotten to this one.
Wow, this is the fun part, right? That's what I said. So that's why.
That's what I do.
That's right. That's why I remember we're gonna do this in 3 phases. Phase 1, we're gonna mark up the chart. Phase 2, I said now we're gonna find entry points. Because now you, oh, let's look, yeah, nice.
Looks good.
Yeah.
That's great. Look at all that heat.
That looks great. You can do your analysis really good, but you're not in any trades.
No?
Okay, but everybody had the 5 points to marking up your chart.
Yes.
Okay, perfect. All right, so now if you guys want to, we can take a little break for a couple minutes if you want, or we can just plow through.
Excuse me, Trace.
Huh? Oh, the fifth one is your trend lines. Yes, ma'am. Yes, ma'am.
We need you to go over those 5 points one more time. A couple of people didn't get it.
Sure. Okay. So step one is you're going to pick your pair and go to the daily. Okay. Step two is you're going to mark your high point and your low point. Step three is you're going to identify your bullish or bearish engulfing candles and box out your supply and demand zones. Step four is you're going to mark up support resistance. And step five is you're going to track the market with your trend lines. Everybody got it?
Yeah.
Did your trend lines go away? Did they leave you? Four? Okay, let's say it one more time, guys. One more time. One is you're going to choose your pair and go to the daily chart. Two, you are going to find your high point and your low point. Three, you are going to identify bullish and bearish engulfing candles and mark up your supply and demand zones. On the day, all the day. Four is you are going to mark up your support resistance. And then five, you are going to track the market with your trend lines. Okay? Okay. You guys in the chat, those of you that have the 5 steps, there you go, Judy. Type it in for the group. Okay? Fabulous. All right. So now that we have the pair marked up, and you would need to do this with now do you see what people say, just pick 1 or 2 pairs? Pick 1 or 2 pairs. Why? Because if you're really going to follow a pair, I'm going to say this. I'm not that good with keeping track of, this is why Chris Terry has a setup of 5 and 6 different monitors and things like that. Or you can go on TradingView, you can upgrade to the Pro version where you can create 4 different screens, right? So if you have 4 different pairs you're watching, you can look at TradingView, you can have pair 1, pair 2, pair 3, pair 4. I think you're gonna have pros even do pair 1 and pair 2 to have 2 screens, right? But you can do that. But the idea is that you're waiting for a move to happen. And while you're over there looking at UJ because Swipe Trades told you to go through UJ, you then forgot that you're waiting on your move on Euro USD. And when you do that, this thing breaks through, you miss the retest, now your whole move is missed, and UJ hit stop loss. Now you're mad because you missed your move and you was losing to somebody else. Here. Okay, so focus. Focus, pick yourself 1 or 2 pairs. You can make more than enough money on 1 pair because you're gonna be catching multiple moves with the 1 pair. If you're watching it, you can get into buys, you can get into sales, you can get into all type of things on 1 pair. If you're watching it, multiple positions, everything. If you're all over the place, you're catching it like by chance almost. Or missing it. Or not catching it at all, Bonnie. You got that right. Okay. Okay. So now you can see something, right? All right. So now let's talk about, oops. Let's talk about getting into the trades.